First question, Nicholas, reading your story, it's been quite fascinating. You've dropped out and wanted to sort of build an amazing company right from at such young age when we were all thinking about
Mhm.
assignments and submitting uh, papers to our professors. You were busy building
Yeah.
one of the most successful companies in India. Um, and if I have to just split your journey into three phases, the first phase was enabling investment through Zerodha,
Hmm.
wherein you are getting hoping more and more retail investors come into stock markets, and that's the wider vision of Zerodha was. Then your
Right.
next sort of phase was to make your own investments through a platform called Rain Matter, wherein you
Hmm.
invested and so on. Then
Hmm.
you have now quite actively engaged in the next phase, which is basically to manage investments. So
Right.
that's sort of your three stages, if you were to look at it,
Mm-hmm.
and that's very very important. And what you are doing from
Mm-hmm.
coming to our unicorn report and connect what you were doing, it's quite important because one of the most important aspects of wealth creation is preserving wealth and
Mm-hmm.
bringing experiences of young entrepreneurs like yourself to advise more and more traditional entrepreneurs in terms of creating wealth through new corridors, and that's something that is
Right.
really requires, and that's how the other economies like China has grown. So, in this backdrop, if you could just give us
Mm-hmm.
a bit of an insight into your life, your journey, what were your thought process when you decided to drop out, and all that stuff to leading to where that'll be great.
Yeah, sure. So let me start from the very beginning. So my dad used to work for a bank, Canara Bank. So it meant our childhood was split between different towns in India because he would get transferred once every 3 years. So we started off, I think I was born in a small town in Karnataka called Shimoga. We did some time near Delhi, in Haryana, in a place called Karnal, to the point when I came back to Bangalore when I was about 8 or 9 years old. And I've been here ever since. One of the things that began very early for me is chess. I would play chess. It began as a hobby, thought I was a little okay at it or a little good at it. So started playing it professionally, got a coach, then started taking part in a bunch of tournaments, and one thing led to another. So around the age of 14, 15, typically you're in the 10th grade at that time. This is when I stopped going to formal education. There were a bunch of factors which led to this, chess being number one. And number two, I had started off tiny businesses, like, with some friends who I knew from school, like a phone business and a garment business and stuff like that. Started that, was doing fairly well. Uh, it grew at one point. I think we used to sell used phones. And at one point at home as a kid, I would have like 50 phones or 100 phones. And it was actually scaling because we would sell it at a very reasonable price and we would buy it off other school kids and college kids, the ones that were in our circle back then. This quickly transpired into, I think, the desire to make more money. And stock markets were something I was always invigorated by, amused by, something which does not have too many hierarchies, as in it's an industry where if you do well, you can do extremely well. There's no barriers as such. I also had the added advantage that my dad used to invest, Nitin used to invest a little bit back then, and started trading at the age of about 17. I used to have a job. I had quit schooling by then. I had quit the whole formal thing. So I'd taken up a job in a call center when I was 17. Uh, Typically, you're not allowed to work before you're 18, but I had friends there, and this was a call center in Bangalore called 24/7. They somehow pulled something off and let me join a full-time job when I was only 17. So trading and call center were going on through 17, 18, 19. I think when I was about 20, I had stopped the call center thing and I had gotten into trading full time. I think 19ish. Trading led to, so trading is like anything else. When you start it, you lose money a few times, you make money a few times, you make the mistakes that today you recommend others should not make, but it's the natural cycle that you go through. Uh, Trading quickly evolved into managing money for other people, initially friends, and then people who were friends of friends, and people who had heard about the fact that I was managing money back then. That then in turn led into being a sub broker with different broking houses. So you could manage money by virtue of using their platform, and you didn't have to log into each client's account individually and stuff like that. That brought in a few efficiencies into play. Being a sub broker, by this time, me and Nitin had joined together. We used to run a company called Kamath Associates, wherein we would manage money for a bunch of people who were our friends and family and stuff like that. Back in the day, the brokerage, the commissions were very prohibitive in India. Like if I were to make 5 rupees of profit, I would end up paying as much as 2 rupees in commissions. So the broking thing happened very organically. At the very beginning, our intention was to kind of save the costs that we were incurring by having a broking license of our own. And the advent and the journey of Zerodha has been extremely organic. We have never really put out an ad there, or we have never done much marketing. I think the ethos were right from the very beginning. We were trying to make an industry which was very opaque, more transparent, and efficient by virtue of charging much lesser fees. We knew of many other traders just like us who didn't care for a relationship manager or the fact that you can call somebody and talk to them, but were willing to do everything online. So Zerodha began like that, and the cost structure at that point, wherein we charged a flat 20 rupee fee versus the percentage that people were charging, made us very appealing to the full-time traders of the day. Uh, with Zerodha, we might have started off with the cost advantage and the fact that we were a lot more transparent than the incumbents. Along the way, we kind of got lucky to have Kailash join us, and we transgressed, or we laterally grew into being more a tech company, which was in the stockbroking space, versus a stockbroking company which is tech enabled. The USP of Zerodha today is the tech products that we put out there, the efficiency that we bring in order execution, the transparency around everything we charge, and all the processes that we might even run internally is what appeals to the client base that we have today. So that I think kind of significantly details Zerodha's journey. Zerodha has now grown and scaled and is the largest broker in India and does a large percentage of all the transactions which happen in India. That was the first part. What was the second part you asked?
You moved to investing quite actively through Rain Matter. Then
Yeah. Yeah, so Rain Matter, I think the good thing about Rain Matter is we have stuck to what we know. 90% of the investments in Rain Matter would be the fintech crowd, fintech companies, products that we have in a way grown up using. But outside of that, these are also products that we understand a little bit better than companies outside of fintech. Rain Matter has a dozen or so companies which we've invested in. Uh, a few of them have done well, a few of them have not done well, much like any other venture capital company around. I think we are yet to hit that big jackpot in the venture capital space. For most VCs, you need to find that one company which kind of makes up for the other nine which did not work out.
yeah.
I don't think I don't think that has happened yet, but fingers crossed. Hopefully, it happens soon.
And True Beacon. That's something that you're
Yeah.
really passionate about, and you've been doing some really fantastic job in terms of what the numbers that you have shared
Hmm.
with the other
Hmm.
the other interviews. It's
Hmm.
truly amazing, and that now that you've told me your journey, right? I think your
Hmm.
early strides into actually starting up a business at such a young age, possibly all that has had an impact in terms of you choosing the right company and shares and so on. So tell us a bit more about True Beacon and what does it stand for? How you plan to disrupt the industry? Uh,
Sure. So the asset, okay, we are focusing with True Beacon on the ultra HNI space. The minimum ticket size is about $2 million for any investor who comes into True Beacon. Uh, this started when I was personally trying to allocate my capital to a private bank or a wealth advisor, and I found many inefficiencies at play. Like let me not name which bank this is, but a private bank, where I would go to them and say, sell me a product, they would first charge me like a percent or 2% to recommend a product, like, because they were playing distributor and they didn't manufacture product in house. This was followed by the fund manager charging me a setup fee, which was another 1%. Then I would have to pay an annual maintenance charge or annual fund fee of another 2%. Then my money would have a lock in, wherein I can't take out my money when I need it. Plus, if I want to take out my money, I have to pay them my exit load. Now, after all of this, if by chance they made money, which was typically lesser than an ETF would have given me, or a passive fund might have given me, they would charge a portion of my profits. So I thought this model can't work. And this is how things had been run for, 10 years, 20 years. There was absolutely zero disruption in the asset management space.
yeah.
So if I put in $100 into a private bank or asset management company, at the very beginning, the fund manager is only getting 97. And there are great fund managers out there, but nobody's a messiah. Over the long term, nobody really knows what will happen tomorrow or next year or 10 years down the line. We all try to get our rules and our basics in place. We diversify, we research the company thoroughly, and we try to do everything that can be done, which is right. And then you still have to hope for the best at some level. And we thought, let's change that. Let's remove the setup cost. Let's remove the middleman. Let's remove the distributor. Let's not have any standing fees. So no 2% annual management fee. Let's make the fund completely open-ended. Clients can come in when they want. They can go out when they want. Let's not have an exit load. The only thing we will charge is we will be so client aligned that we will charge a 10% carry. So here, when you put in $100 into True Beacon, all 100 comes into the fund. And if the 100 becomes 110 at the end of the year, we will charge 10% of the profit that you make or one as fee. And this level of client alignment we had not seen in the market up until now. So it's not a very old company. We spent a year and a half setting it up, getting the licenses in place. It's a category 3 AIF under the SEBI. And we have a Cat 1 FPI license out of Mauritius. So the foreigners come in through there and the locals come in through here. So far, so good. Our intention is to beat the benchmark, which is the Nifty. So we only invest in large cap companies. We don't touch mid cap, small cap. So in the blue chip universe alone, that's 65% of the fund. The other 35% of the fund is a long short strategy, which takes advantage of mathematics and volatility spikes over the short term. We want to beat the benchmark Nifty, which has done about 11% traditionally, by about 6 to 8%. So we are trying to get to the 17, 20% kind of level. In the 9 months that we have been around, we have kind of achieved that and more than achieved that. I think we're holding a 25% alpha on the Nifty right now. But over the long term, I think the target is about 6 to 8%. It's a very different company. I think outside of being all a culmination of all the issues I faced, I think we are looking at True Beacon more as a membership only kind of platform versus an investor fund manager kind of relationship. So each new person who comes into the fund, we kind of get into what the holding company does. What is their business? How can they benefit from our individual networks? And how can they benefit from the other members of True Beacon? So we might have a cement company from Delhi and we might have a real estate company from Bangalore who are on our platform. We would connect them and see if they can work out something which efficiently benefits their business. Fund number one is now out. It will soon have many kind of funds. It'll have fund number one was the AI vehicle. Fund number two, the FPI has started recently. We will get into other categories. We'll have a whole host of funds. But the plan with this is to be an end-to-end asset management company wherein we will kind of cater to the ultra HNI space alone, but in any kind of a product they might need, but do it in a manner which is more efficient than the incumbents have had up until now.
But why such a low carry? Especially because you are swallowing all the upfront cost and all the hidden cost, and
Right.
ideally, why you should charge anywhere between 20 to 25% at a minimum for the carry.
Right.
And why such a low carry?
Well, like I said, I think like returns and yield compounds, even fees compound. Now, if you were to compare a 2 and 20 structure, which is typical in our industry, with what we charge as True Beacon, over a 10-year period, True Beacon and the other fund assume they both yield 15% a year. True Beacon would give out 40% higher than the other fund would in 10 years by virtue of not having had these fees in place. With True Beacon, luckily, because of the success of the previous venture and all of that, I don't think it is too much about what we are going to earn. It's not too monetarily kind of focused. The intention is to get people to actually make money and actually build brand loyalty. And we will do it for a long, long time. And, like Zerodha, here again, we don't have any marketing or branding or ads that we put out. It's all word of mouth. So the first 50, 100 users who come on the platform, because everybody's coming in at a 2 million ticket size, it's going to be a smaller membership kind of platform. I think if they're happy over the next few years, this company has the scope to grow into so many other things. We can do everything a private bank does, but do it a lot more efficiently.
I mean, it's a one. I must really admit that it will definitely have a very much of impact that Zerodha had with the retail investors, and it will have an impact for the ultra HNIs. I mean,
Yeah, yeah, that is the intention of it.
that's really cool. And extending for one question, we had actually valued Zerodha as a unicorn at least 2 years back, right?
Right,
And but this specifically to the global unicorn report. Globally, we have
right,
590 unicorns led by US
right,
and China with about 235 each, 235 to 27.
right.
India is somewhere around 21 unicorns, right?
Mm-hmm.
Um, and one interesting statistic that I want to share with you is about 40 unicorns in the US are co-founded or founded by Indian origin entrepreneurs, which means the entrepreneurs who were born in India and who were educated in India and they moved to the US and found these unicorns, right? So, what would you comment on the ecosystem of India? Are we still there in terms of giving opportunity or motivating more and more smart people to come back and set up amazing, successful companies? Why are more and more people going outside of India and setting up their own enterprises? Any advice or anything that you've noticed on that front that you can comment on?
I think the whole brain drain from India happened in the 90s. So a lot of the people setting up companies there who might be native to India, I think are beyond a certain age.
Yeah.
But we see this trend changing very quickly. I know of so many people who are moving back from America right now because they believe to start a company, the target market size in India is tremendous right now. If you can create any kind of a real disruption or you can create a product which is more efficient than the incumbents might have in India, the opportunity, in fact, might be much larger in India right now. We
Yeah.
see this trend changing. I think it has been changing gradually ever since maybe 2008, 2009. But things like the coronavirus, things like there are many factors at play here, but I think the process of them either coming back to India or lesser people traveling out of India is getting expedited. I think in due course, we will see a lot of these people either A, coming back or not leaving in the first place. One thing that definitely has to change is the quality of our higher education has to kind of match up with what is available in the West. Because many times you find that these people actually go there to study and then in turn kind of end up, starting companies there. When we take substantial steps in starting new educational institutions here, in improving the state of the colleges that we do have in India, I think this trend will change very quickly.
Okay. And if you extend that to investors who would want to invest into India, uh,
Mhm.
has would that trend also change in the coming years? Because all the setting up a successful company is an extension of more and more Indian origin ultra HNIs possibly wanting to invest more into India as well. Through your experience in True Beacon, have you seen that shift happening? That's number one question. And number two is Zerodha is a tech company, and you have a uh, you and Nikhil, you come with a lot of tech background, which has had a huge impact on how you've shaped up your investments. So, what is the so you definitely have an alpha when you compare to the rest of the possibly the wealth
Mhm.
management players in terms of having their experience in tech. So,
Right.
how have you seen that shift? Have you seen any kind of shift happening on that front? And number two, on the role of tech in wealth management.
Yeah, sure. So, to the first question, we are actually seeing this firsthand. So, our FPI not only brings institutional money into India, but if you're a HNI, say you're an American, you're a French guy, you're from Southeast Asia or even Africa, we are seeing significant growth in demand for people to have some kind of India allocation in their portfolios. In the last maybe 7 days, we've had an American come in, we've had somebody from the Middle East come in, we're talking to somebody from Africa come in. And these are not institutions or family offices. I'm talking about individual investors. One of them is the founder of a big PE fund in America, which does investments across the globe. But it is becoming paramount for everybody in the world to have some kind of India allocation. Uh, these seem to be the largest markets out there right now, India and China. It is very hard for a foreign investor or an Indian investor to enter China because there are many different forms of red tape at play. India is in a great position. It has a great opportunity to attract a lot more foreign capital than it has up until now. I think the government needs to pay heed and kind of tweak a few things around, which is stopping foreign investors coming into India. But I think the government recognizes this fact, and we see them taking steps that are required in achieving this end goal.
And the second question
Uh, yeah. So, what was the second question?
on the role of tech on wealth management and
Right,
how.
right. Yeah. So, what we are personally doing under True Beacon is, like I said earlier, we're trying to make everything that was opaque very transparent. A product like ours would never entail every single fee component for the user to see. You would have to actually dig through, reports which were complicated, cumbersome, a whole bunch of different reasons why people could not do this very easily. A, we are changing that. But B, even if you wanted to know what your NAV is, you want to know what the value of the money you have invested is tomorrow afternoon at 12 p.m. Typically, you couldn't do this with the fund in our category. You would have to wait for the email or the report which was sent to you once every month. So we have built a dashboard wherein your NAV, your investments, the value, all of it is updated on a live basis. You can check what the value of your holdings is on any given day. And we have eliminated the role of a relationship manager because you can add funds, you can withdraw funds, you can do all of these simple processes online. And I think that is also one of the reasons why we can charge as little as we charge right now, only the 10% carry, is these tiny efficiencies we've incorporated into the product.
And how is your competitors reacting?
Uh, I think right now the problem with this industry is client relationship is paramount.
Yeah.
So at this point in time, the relationships they hold, it will be a very organic leak because we are not going out there and pitching to someone else's clients. nor are we putting any ads out there. Our process of garnering clients is we get one guy from word of mouth, and then he has to be happy in 1 year or 2 years, and then go tell two of his friends, and then the two have to tell four. So it's a very slow process. So I don't think they would be considering us a serious threat right now, and I hope they aren't. But in due course, I think word of mouth should kind of like, there's always the inflection point with the product which is actually better, and word of mouth kind of gets there in a few years.
Yeah, I know for a fact that if something more and more people know about this,
Yeah.
sure there'll be a lot of. It's just about
Mm.
education. That's it. Yeah.
True.
And I have to ask a coronavirus question. It is uh,
Yeah.
COVID-19 season now.
Yeah.
When this hit India or hit us, what was the first
Uh-huh.
discussion that you and Nikhil had in terms of, man, this is got to come now, we got to do something about it? And number two, in terms of registrations with Zerodha, it's all shot up really high. Were you
Yeah.
expecting? Number three, do you think it's more permanent, the spike in
Mm.
trading? And what do you guys talk about these days in terms of your responsiveness? Because things are changing on a daily basis. And
Right.
yeah, you just take me through that.
So luckily we were prepared. So a couple of weeks even before the lockdown happened, we had prepped for everybody to work from home. We had tested it. People started working from home even before the lockdown actually happened. So like a large portion of our staff, maybe 90% was working at home. The crazy thing, Anas, is these people working from home, A, they don't have to sit in traffic for an hour to go to work and go back home every day. B, I think that whole social element where time is wasted in saying hi to everybody and the smoke breaks and all of those have gone down substantially. So people are actually more efficient working from home for us. I think even in times of adversity, like we are seeing today with the virus, the fact that they're closer to their families, I think, is making people work a little bit harder than they would otherwise do. So, a culmination of all these factors has actually made us as a company and our employees and our colleagues more efficient by virtue of working from home.
Yeah, and this change in trading in terms of increased numbers of trading, is that a more permanent change? I mean, is it? I mean, India really needs that. But do
Yeah.
you?
Uh, I think what will happen to companies like ours and everybody else who is more on the tech side of things is even when we come back to office, I think we'll have a situation wherein maybe 25% of the staff come to office at any point of time, but at any point, 75% would probably work from home. In terms of the number of new accounts which opened, the spike happened in March. Many factors at play, I'm sure, but one of the biggest factors has to be the fact that people had so much more time at home, and this might have been something they had to do for a long time. They intended on opening an account. They wanted to invest in the stock markets, but they didn't get around to having the time to be able to do it. But March was that trigger because everybody suddenly was at home. So we saw a 100% spike. Another factor I would attribute this to is the crash in the markets. When the markets fell from 12,000 to 8,000, people genuinely started seeing value in many companies that they wanted to buy but had not initiated a buy on up until now. The great thing in all of this is a lot of the retail crowd, which is really the ticket size between 10,000 to 1 lakh rupee investment, has bought equity at the right time. I mean, they bought good quality companies at the 8,000 levels and they're holding on to it. So when these guys have this 10, 20% up move that they have seen, I think will bring a lot more people into the stock markets.
I mean, like,
Uh, Yeah, yeah. The fact that we're also running out of avenues to invest capital in very quickly, like uh, India is a very real estate heavy nation. I think 60-70% of our asset base is always in real estate. I think it's maybe lower in the affluent, higher in the middle class, depending on what strata of society you belong to. You still have a considerable portion of your assets allocated to real estate. The fact that the real estate markets have plateaued over the last 5, 10 years and not really returned much, combined with the fact that FD rates have fallen off a cliff and now they're going to as low as 5.5%. Plus, the government does not really want Indians to buy gold because we don't have any of our gold. It affects our fiscal deficit. The avenues to allocate capital in a liquid, transparent, very well regulated, open ended manner, wherein you can track what is happening and also take advantage of the long term capital gain tax rate of 10%, stock market seems like a natural progression for money to come into.
Yeah.
If you have to talk about penetration in India, I think 5-6% of our country has direct or indirect access to stock markets. That same number in America would be 95%. So it, I hope it's an industry and a sector which is set to burgeon like it's very, very quickly. And I think we are getting to that inflection point wherein a lot more people will come into the stock markets.
Then how do you get a stock idea? How do you, is it just
Mhm.
data, or is it like when you walk by the road, you see something and then you decide on a share? How do you get it? What are your thought process?
Yeah. Well, I think a lot of research goes into it. We have many people who are researching different sectors in different companies at different point of time. But I think to follow the money, especially say the sentiment around money globally, will give you a good indication of what sectors you should hold for the next 12 to 24 months. You have publicly available data like which hedge fund is buying what are the FIIs doing, what are the domestic institutions doing, the promoters of which company are reducing their own stake, what are the regulatory hurdles or what are the regulatory announcements expected which can affect a certain industry. So these things kind of help you arrive at a larger 12, 24-month direction. But individual stocks, we have people who kind of, spend a lot of time researching each one. And then we decide to allocate capital.
And what is your, I'll just ask most specific, personal questions. What is your typical
Yeah.
daily routine? When do you wake up? What do you
Uh,
read? All that stuff.
yeah. Let me start with the reading thing. I like reading history. I'm a big history buff. So I would read everything from uh, the Greek history to the Greek philosophers to Italian history to the German history to how the American history has evolved. I like reading about art. Art is something that I like as well. Renaissance art, say if you go back 15th century, 16th century kind of art as well, I like. I like reading about behavioral finance, especially getting into the psyche of how people think. I think psychology is fairly interesting to me. These are some of the things that I do enjoy reading. Personally, my day is pretty repetitive, Monday to Friday. I'm a bunch of my friends call me robot, and I think my life is much like that. So I wake up at exactly the same time every day. I wake up at about 6:45. I come into work at about 8:15. I eat exactly the same thing for breakfast every day and have been for I don't know how many years. I have 4 eggs for breakfast. Uh, then the market opens at 9, and then I have a bunch of Zoom meetings and in-person meetings, and markets close, and then there's some other meetings. Typically, the day goes on like that till about 8:30. I go home. I typically play pool with Nitin for about half an hour or 20 minutes. Then I work out for an hour, and then I go back to bed. I read a book or something for an hour, and I go back to sleep. That's it. That's exactly what I do every day.
What time is that? What time do you sleep?
11:30, 12, around that time. 11:30, 12. Depends on how the day has been. If it has been a hectic day, maybe a little bit later,
Yeah.
but typically around 11:30, 12.
Yeah. It's quite interesting you spoke about history. Actually, I'm reading
Yeah.
this book right now, Napoleon.
Ah, nice. Very nice.
Yeah, by Andrew Roberts.
Mm.
What are you
Ah,
reading now?
I'm reading Michelangelo.
Oh, wow.
Yeah.
Can you show it
By
again?
Anga.
Uh,
Yeah. Can you?
Yeah, cool. Have you read
Yeah.
the Anarchy by William Dalrymple?
No, I haven't. I
Okay.
haven't. I want to read it though. I
I-
will at some point. I've got this.
I-
Yeah, yeah.
That's
I've kind of like developed this new habit that while I work out, I can like read as well because I use Audible a lot.
yeah.
So that seems to be like the best time pass. You can get on a cross trainer for an hour and just play a book, and you do both things. So you don't get bored of being on the cross trainer for an hour.
Okay.
Yeah.
Now, philanthropy. You're
Hmm.
very active in philanthropy.
Hmm.
I mean,
Hmm.
I can even go on record and say that young self-made entrepreneurs, the kind of philanthropy stuff that you guys do, it's possibly unmatched. Yeah, I think you donated 25 crores a couple of months back when the COVID situation started. I mean, you're very serious about it. What are your uh, what are your thoughts on philanthropy? What do you plan on doing it further? How are you doing it? Could you tell a little more about your philanthropy side?
Yeah, sure. So, I mean, philanthropy is a team effort. I mean, like we all kind of dwell upon what we should be doing together as a company and personally. But I think it's going back to the roots. Now the problem has gone to such an extent that people don't have food, right? I mean, philanthropy and supporting a cause or art or all of those were more relevant pre-COVID, but I think right now it's just about getting people home, getting them fed, giving ration kits, stuff like that. I'm in the fortunate place of not really having any dependents, so I think it would be a lot easier for me to do philanthropy than it might be for most. But we all should do more, I think. And we all, like the government mandates that 2% CSR as philanthropy, which more corporations do. But as a community, as an ecosystem, I think we all have to become more conscious of what is going on around us. And we all have to contribute and do more because I see people doing it now, but net, if we add all of us together, I don't know if we are solving any substantial problem significantly. I think a lot more help is required, and
Yeah.
we need to get a lot more people on board to make an actual change.
And do you directly donate money or do you do it through an NGO? How do you do it?
We do all kinds of things. So we sometimes do it directly, sometimes through an NGO. There
Okay.
are many great institutions out there. One I can vouch for is Akshaya Patra. I think
Yeah, I
they
know that.
do they do an incredible job. I think for people who would not like to take on the onus or the ownership of running it themselves and making sure everything is happening the right way, institutions like that are a great place to send money.
Okay. I'll introduce you to the Edelgive Foundation. Who
Yeah,
we, I mean, I'll
sure.
let you go. That's an interesting thing.
Yeah,
So now I'll ask you rapid fire questions.
sure.
Or Rakesh Jindal. Who do you like the most?
Warren Buffett. Warren Buffett.
Okay. And I'll give you six nifty 50 shares that has done well. If you can arrange
Mm-hmm.
it in the order of your uh, preference.
Preference.
So, Reliance, Britannia, Nestle, Asian Paints, Dr. Reddy's, Adani Green.
Reliance would come on top, followed by Britannia. Did you say Dr. Reddy?
Yeah.
Yeah. Reliance, Britannia, Dr. Reddy. Which was the other one?
Nestle, Asian Paints.
Okay. Nestle, Asian Paints, and then Adani.
Okay. Uh, this is a very straightforward. Share of profit or upfront fees?
Share of profit.
Options or equity?
Options.
Work from home or work from office?
Work from office.
US stocks versus India stocks? India shares.
Right now, US stocks.
Your favorite Indian entrepreneur?
Oh, this is a tough one. I mean, I could say Azim Premji. He's not an entrepreneur of today, but he has been for so long, right?
Yeah.
Azim Premji? Yeah.
Him. Then favorite Indian non-promoter CEO?
Neville DMart.
Okay.
He also happens to be a friend of mine.
Okay. Private jet or commercial airline?
I use commercial airlines.
You
I think I like them. Yeah.
Okay, now I'll read five animals or birds and stuff. You can relate to a company in India. First is a
Mhm.
stallion.
A stallion, Reliance.
Okay, rabbit.
DMart?
Okay, why DMart for rabbit?
Because they just keep going up and up and up and running, in material of what is happening, COVID, this thing, that thing, doesn't matter. I think they're one of those few companies where the business model works under every scenario, in the sense that they're constantly running.
Okay, lion.
Lion, Infosys.
Why is Infosys lion?
Well, there's something very intimidating about the magnitude of what Infosys has become. I think they're this company which came out of nowhere way in the 90s, but it has created so many stalwarts. Their company has produced maybe 20, 30 leaders, and it's something that everybody respects. You find anybody in any industry, when you talk about Infosys, everybody has respect for that company.
Okay, a phoenix. It's a more of a hypothetical
Yeah.
phoenix.
A phoenix, what is getting reincarnated in a way right now? A phoenix, I mean, if Vodafone is able to make a comeback, maybe it's the phoenix, but an actual, which company has, yeah, I think maybe Vodafone, maybe something in the oil and gas space. The crude commodity prices are rallying after having gone to under zero. So anything related to that is a phoenix in a way.
Yeah, it doesn't have to be a perfect
Yeah.
answer. Something that comes to your mind.
Yeah.
The last one is eagle.
Eagle. I would say Kotak Mahindra Bank.
Okay, cool.
Yeah, they seem to know exactly what they want and they go after it and get it.